right, welcome to Stock Charts Trading. Today we're going to be talking about head and shoulders. So here's basically a typical head and shoulders pattern. You can see that there's an uptrend and then there's a little stall out there, comes back down, gives you a retracement, then breaks out. Trend continuation, stops at the head, which is a higher high, right? So here's a high, here's a higher high. That higher high now becomes a lower high, which is the right side of the shoulder, which is usually pretty even and even in time frame. So from here to here, if that is a month time frame, then usually from here to here is another month time frame. And they're also about the same in price. And then it comes lower. Here's the neckline, is the bottom of these two shoulders, and that's the neckline. Sometimes you'll have it where price just shoots right down. Sometimes you'll have it where you have a little pullback, which is now old support makes new resistance and then falls back off. The way that you get your target is you take from the top of the head down to the neckline, which is the bottom of the shoulders. You duplicate that, making a range box, and you get your target. You can either buy here at the breakout, or you can wait until you get the pullback, get in, get out at your target. Usually once price happens, this is a 1-2. If you see right here, you got a leg 1, a leg 2, a leg 3 with the pullback down into a leg 4, and your target is usually exhausted by the time that you hit this second box. So just be careful. You're not going to get 10, 20 boxes. Here we are. We're going to look at a picture of a chart with candlesticks. And so you can see that the candlesticks come up and they pull back, counter trend trade, and then they continue into the last portion of the trade, and that makes the head. Price falls back off right to the neckline, bounces back up almost, not quite, to this shoulder, and that is okay. Sometimes you'll have a little higher shoulder, sometimes you'll have a little lower shoulder, sometimes you'll be exact. Some people might have said that this right here was the right side of the shoulder, but for time, remember it's both time and price, and so you have to usually the same amount apart from each other. So that's why I would consider this more to be the right shoulder, and then if it falls down. And you can see from basically the lows here all the way to the highs, it gives you about the same price range from the breakout down here to this shoulder. And then you see that we go into another price pattern of head and shoulders. So here we have the left shoulder comes up, makes the neckline, comes down, makes the head, comes up, makes the other neckline, comes down, makes the other shoulder. Price is not the same, but the distance is about the same. And then we break the neckline, price goes up and duplicates the target price. All right, here we are with NVDA. If we just take the last couple months, you can see right here at the bottom, we made a reversal. So what did we have, right? We have a downtrend. And so if we make a channel here, it shows this downtrend. In that downtrend, you can see that you came and you bumped along the channel here and it went up. Once price went up, that made that shoulder right there, came down, went further than here. And so, of course, that is your head, came back up to the neckline, came back down, made the second shoulder. And if we were to take the neckline and duplicate that from head to shoulder, duplicate that up and see where price went, we see that we hit it exactly. We gapped up right there, and so that's a confirmation that that pattern did work. So let's look at the next pattern. Here we are on workday. You can see that we have the highest high right there. So of course that's going to be the head. If you come back, you'd see that we have the shoulder and the other shoulder on this side, and you now have a head and shoulders pattern. With that head and shoulders pattern, you can see that we broke the neckline right here, and what happened? Duplicate price down. Did we go to it? Of course we did. And that's the end of your trade. So you could have got in here, or you could have got in on this lower high and taken it all the way down, just depending on what your trade strategy is. If you were to take that shoulder, you would probably have to have some confirmation, kind of like a break in trend line right there. You could see we had a support level, broke that support level, came back, retested that support level, made that shoulder, price dropped, and you could have held it all the way down to here, which would have gave you close to 18% move in the market, which would have gave you huge profits and returns, especially if you had options going. All right, so I just gave you two examples looking past, and it's always easiest to look at hindsight, but if we look right now, we have AAL, which is American Airlines. You can see that you have a shoulder right here, you have a head right here, and you have another shoulder right here. So if we were to take a see, all right, how can we confirm that this is a reversal pattern? A reversal pattern comes at the end of an uptrend or a downtrend, and so here we have a downtrend, and we can see that price has bumped up against that channel a couple times, pulled all the way back up, hit resistance, came back down, and now you're in the middle of the channel. So you are not looking at this as resistance, but you're looking at the pattern, the head as the resistance. You broke out of the channel right here, and you had a pullback, and what happened? It landed on support, support, support of this channel. Now you have what happens after a down channel. You have an up channel, and so we could probably take something along these lines and just come down into this range and say we expect support here, we expect resistance here. And no, this isn't an exact measurement, but just for kicks, let's look and see what happens. If we take from the head down to up the neckline, so the question is, are you gonna buy here and duplicate this box and have a target all the way up to $25, or are you going to wait until you break the neckline here at $17 and take your price target up to $25? So now that we can see that the head and the neckline give us the average move that we should see in this price reversal, but also it gives us the time. So we can see that this is the beginning of March, and we can see that we are right now into the end of April. And so that's a 2-month time frame. So if we were to duplicate this box upward, it gives us price, but it also gives us kind of a timing of when this would take place. And it kicks out all the way to about June. And so you can see that if you were to buy an option, you'd want maybe the August options, and you might want to be selling at $22, $23, not taking it all the way out to the exact mark of $25. Because you can see that we run into a little resistance here at $25. You have a gap, you have support, which is going to make new resistance. But that gives you a great indicator of where to buy, when to buy, how long to buy. You can find these prices over and over and over again in the market. Keep on looking for Head and Shoulders. Until next time.